Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, October the 4th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having that out of the way, let's get it on with some economic data. Tomorrow we have the unenjoyment Friday is what we used to call it on the floor, so that's going to be the big number of the week. But before that, we also have Coral speaking right now. Also, here in the United States, we got natural gas storages coming in at 98 billion cubic feet, expected to be 47 billion cubic feet. So a huge build in natural gas. Part of that's going to be the byproduct of the fracking that is at all-time highs that we've got going on. And factory orders in line with expectations at 2.3%, expected to be 2.2%, so just slightly higher than expected there. And last month's number was revised from negative 0.8% to negative 0.5%, so better than expected on that front. It's also a Chinese holiday, so we would expect maybe a little bit lighter than normal volume going on here in the United States. Unemployment claims coming in at 207,000, lower than the expected 214,000. That's not a major economic data point to look forward to, but it could be a precursor to what we're going to see in tomorrow's non-farm payrolls. Lower claims, meaning more people are employed and not looking for a job. That's generally better for the overall economy. All right, that's it for the overall economic data. Yesterday, we were talking about crude oil having a massive build in crude oil. That being said, we didn't see much weakness yesterday like I would have expected to see that market really come back off and maybe even settle right in and around that 78 Fibonacci extension we've been talking about. Not happening as of right now. Not even seeing enough of a pullback for me to really be, convinced of a bit of a top here. So that being said, this could still be a continuation. I'm not really playing around with that right now. I'm going to wait till I get a really discernible direction in crude oil before I start stepping into that. We've got gold futures continuing to support that $1,200 mark. We are right there. Probably going to start accepting these levels where we're going to start seeing some of the volumes come back down to this area and people either get out from being long up here, just finally toss in the towel, or start getting long here. I think we're going to start seeing some volume build up around these levels. Bitcoin, yes, nothing to see here. 6,500 seems like the wheelhouse for Bitcoin. Bonds really selling off again today after yesterday's big sell-off. That was part of the overall rally, market kind of accepting the fact that, hey, this market really is doing well in the equities. Even though we're at all-time highs, people decided to pull out of some bonds. I think that was part of the catalyst of this sell-off. Bonds, just a little bit overdone for the economic data I think that we're seeing. So I would expect bonds to move higher. I might even start adding some long deltas in TLT or something like that with this big sell-off and the way the market's kind of acting today. Maybe a little bit early before the confirmation, but I'm going to be looking for something like that anyway. All right, on to the VIX. VIX spiking higher back into the teens, trying to get into the 14s, which would be nice. And that all is basically because we're seeing a big sell-off in the equities. Yesterday's making a topping pattern. Today, confirmation, even slamming below the Fibonacci that we had for the 52-week high. That is still going to act as support, although it didn't act like it today so much. Really, the 9-day moving average is more the support, seems like. But that being said, this right here does not look good at the top of a pattern here. We're going to have to really watch this 50 Fibonacci extension to act as support for the Dow Jones. All right. E-mini S&Ps doesn't look the same necessarily as that Dow Jones, but you can see that we got more of a topping pattern here. We were talking about some of these dojis right here acting as a continuation pattern, but then we didn't get any real confirmation, Tuesday or Wednesday. Today, a big slam down with the NASDAQ down almost 150 points on the day, looking for that 50-day moving average to act as support. But again, this pattern not looking good for the near term anyway. E-mini S&Ps reflecting that. You can see on the E-mini S&Ps yesterday trying to rally for the most part throughout the day, but the late afternoon, it just got slammed right into the close. Overnight inventory decided to puke as well. You can see we slammed down there. As overnight inventory saw itself getting short, they tried to flush themselves out, but then on the open again, even though the economic data pretty decent today, we slammed down as well. And that's given us a little bit of buoyancy over there in the bonds that we saw. All right. These are a couple of things that I did. Right after I sent out this daily market commentary, I started looking at my portfolio again. Looked at XRT, nice big move on the day. Decided to get out on this for a double. So I basically went in here and sold or got out of my XRT trade for, sorry, let me find this real quick. The XRT trade that I did yesterday, I got out of for, it was basically a double on the trade. With that being said, I went in and had on the October, and I originally did those October puts. I bought the 51 puts in XRT for $1.12. Was able to get out of those yesterday for $2.07. And that was like right after I got out of the daily market commentary. Obviously, you could get out a little bit better today, maybe even for a perfect double where it would be maybe $2.25 today, where I got out at $2.01. So I took my money and ran on that one. With the XRT. XRT was coming off. The equities were pretty much rallying. I got out of that early in the morning. Had I waited late in the day, I probably would have held on to those till today as well. But I got out a little bit early maybe on that, but it was very close to my double, so I decided to get out. All right. Applied Materials, another trade that I have on that is not working out. If you guys remember, I was looking for this trade for the upside, and I did went into the November and bought the 41 calls in there for $1.53, and I did those on the 14th of last month. So when we saw this bottoming pattern, I thought, hey, you know what, we're going to get a bit of a bounce right in here. Never really came to fruition. I did get volatility expanding on me, which helped, right? When I'm buying this, I bought it with really low implied volatility down here. You can see as I held on to that trade, although I was directionally wrong, volatility was spiking up, and that helped me out. Although it didn't keep me from losing money on this trade, it did help me out. So that's one of those things that we want to do when we're setting these up. And that's why I talk and beat that drum so hard about volatility and buying it when it's low. This helped me out. We can see expansion and volatility increase, helped offset some of that theta decay and a bit of the directionality incorrectness, for lack of a better phrase. But having said that, I got out for 75 cents, sold out for about 50% loss on that trade. As you can see, the market just broke that pattern today. I said, you know what, that's when I'm out. I'm not going to hold on to this dream any longer of this finding a bottom here. So I'm out of Applied Material on that trade as well today. That's about it. Other than today's webinar is going to be on the long put spread. I'm going to talk about all the rules you need to have in and around this strategy to increase your probabilities of success. Just like with this Applied Material. Yes, it went directionally wrong, but everything else that I set up to help increase my probabilities of success worked out. Yes, I lost money on this, but I also didn't lose as much money as I would have had I implemented this strategy in the wrong type of environment, not according to my rules. That would have been the first problem, all right? So despite the fact that I was directionally wrong, my other aspects of being correct, because I set this up with an increased probability of success, helped me out. All right, that's about it. So check out Pro Trader Strategies. Also, give me a thumbs up, thumbs down on this video. If you give me a thumbs down, tell me what the heck I'm doing wrong that you don't like. All right, that's about it. Other than if you can't take that, take it easy.